Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Economic offensive. The U.S. plans to announce economic measures against Iran. Treasury Secretary Scott Bessent says the plan includes the continued blockade of Iran ports. Asian stocks climb as softer U.S. inflation cements bets that the Fed will hold rates next month. Meanwhile, Treasury borrowing costs for 30-year bonds hit a 25-year high as investors demand more yield. And Bloomberg learns that OpenAI is on track to generate more than $40 billion in annualized revenue ahead of a potential IPO. Growth in coding tools, subscriptions, and advertising is helping drive the surge in sales. It's just gone 8 a.m. across the Emirates. I'm AlHammoury in Dubai. Well, happy Friday. Happy Friday indeed for global equities. We're looking at record highs for the S&P 500. We're looking at record highs for global equities, really. But this morning, the picture in S&P futures is flat. Now, that follows a positive session in the S&P 500. Yesterday, we saw it about 0.6% or 0.6% higher. Nasdaq 100 rose 1.2% as well. And the SOX index, that gauge for chip makers, semiconductors, was also higher yesterday. Investors are really redoubling their bets on the AI trade. This is obviously following last month's sell-off that we saw both in Asia and in the United States. And then one individual name that we have kept an eye on yesterday that really solidifies the AI demand game is SanDisk. It was 12% higher after earnings. It again solidified demand for chip makers. It brought up a lot of its peers in the session yesterday, including Micron, Western Digital, and Seagate. And then Asian equities are turning a little bit higher this morning, 0.2 higher this morning. The Kospi is rising in South Korea. Samsung, SK Hynix are rising, contributing to that gain. It will be a fourth week of gains for the MSCI Asia Pacific. This weekly advance for the end of this week would be at 2.6%. So an overall positive picture for equities across the board. Brent crude price is not doing much this morning, about 0.2% higher. The picture is really plateauing in the Middle East. We have the latest from Scott Bessent about some kind of economic pressure being placed on Iran. But aside from that, we've got a couple of ADNOC tankers being hit. So some tensions in the Strait of Hormuz. But when it comes to broader deal prospects, we don't have any clarity yet. So you're seeing Brent crude at $87.2 on the barrel. And then the yield on the 10-year note still at around 4.65%. Of course, we're following that U.S. government story. We're following what the yields generally are doing on the 2-year notes as well. They were little changed this morning, but yesterday they fell 6 basis points. That's the yield on those rate-sensitive 2-year notes. But now money markets are pricing in about a 35% chance of a hike in September, so lower than what we had seen earlier. Now, continuing with the yield story and the government bonds, the U.S. government has sold 30-year bonds at the highest interest rate in a quarter of a century. The yield on the $25 billion sale came in at 5.216%. That is the highest since 2001. So for more on this story, we're now joined by Bloomberg MLive strategist David Savage. David, good morning. Good to have you with us. I'm just taking a look at the story that we put out regarding what we're seeing in the United States. And it really is a testament to investors' demand for greater compensation to essentially finance the growing deficit in the United States. Should we continue to expect those elevated numbers going forward or until the end of the year?
Good morning. I mean, ultimately, this is a structural story. We've seen, of course, it's come in spurts. Since late June, the 30-year is up about 38 basis points. But in recent weeks, of course, we've had some softer U.S. economic data that sort of pulled back some of those expectations, as you said, for a September rate hike. So what we've seen actually is a steepening of the yield curve. And I think really this is a structural story because ultimately, near-term data can certainly dictate where we get short-term yields moving. But in terms of the long end, that data is not going to alter some of the drivers in terms of higher yields, of course, in terms of concerns about fiscal deficits, in terms of where the term premium is. And of course, the longer-term, inflationary impact from growth and drivers like AI CapEx spending and higher commodity prices. So I think ultimately this is a structural story that we'll certainly be talking about in the months to come.
And David, I've been asking you about the yen on your appearances on the show, but we're really keeping an eye on where the levels of the currency are. Right now, we're at around 159.437. So we saw some reprieve yesterday, but we're really edging closer towards that 160 per dollar level, despite the support that we reported possibly from Prime Minister Takaichi's government. What comes next? Another intervention, or do we really need to see a return to fundamentals here?
I think, as we've talked about, certainly for a sustained gain for the yen, to see a real turn in terms of seeing persistent strength, you do need to see, I think, a change in terms of the posture from the Bank of Japan. I think yesterday's move was very indicative that we have seen expectations for a September hike build for the Bank of Japan. We saw the headline yesterday that potentially the government is behind a faster pace of hikes, but we haven't seen that lead yet to a real turn for the yen. And I think that's because the market's not looking to September, October. They're looking for beyond that. What is the pace of normalization for the Bank of Japan? And to date, the market has not had sufficient guidance to expect that normalization to occur very quickly.
All right, David, we're going to have to leave it there. Thank you, as always, for your time. MLive strategist David Savage. Now, for more on the market outlook and wider markets move, let's bring in Equity Group's Chief Market Strategist, Noureldeen AlHammoury. Noureldeen, good to have you with us this morning. Good morning. You probably heard me talking to my colleague David earlier about the Good morning. About the wider moves that we've been seeing in the Fed, but also the yen. And I want to really start with the Fed. The narrative for a Fed rate hike, at least in September, has cooled after that CPI print that we saw earlier this week. Do you think that markets are now sort of underpricing the risk that inflation could re-accelerate?
Absolutely. I think the story has shifted slightly. Inflation is still definitely over or above where the Federal Reserve ultimately wants it, but it's also no longer the only problem. July headlines, as you saw, it was about between 3.4%, the core 2.5%, and the latest producer price data were relatively contained month over month, but then you look at the payrolls. The U.S. actually lost about 23,000 jobs in July, with significant also downward revisions in the previous month. So for me, the labor market is becoming also the more important part of the equation. The Fed spent the last few years fighting inflation. Now it has to make sure it doesn't basically win the battle at the expense of employment. What does it mean for the Fed? I think also September is increasingly becoming a question of whether the Fed can afford to wait at the same time. The problem is, as I said, the Fed is receiving two different signals now. Employment is telling them to be careful about keeping policy too tight, while inflation is now basically, especially with the energy and geopolitical risk, is telling them not to declare victory too early. And I think the question would be now, isn't the Fed will be basically stopping tightening, or the Fed hasn't even still actually started hiking rates. But at the same time, inflation is still above target, and we know that there are policymakers who want more. Especially with the last decision, we saw 3 dissented also in July.
Okay, Noureldeen, I want to bring in what AI means for the Fed as well, because capex is starting to become a real issue capex spending is starting to become a real issue for markets. So when do you think that alone starts becoming a headache, if you were, for the Federal Reserve?
I mean, there's a lot of headaches for the Federal Reserve as we speak. It's not just only that. In addition to the administration pressure that we saw also over the past couple of months, from accusing the Federal Reserve from one side, and the U.S. president trying also to oust multiple of the members. I think AI. The more I actually maybe dig deeper on a daily basis using AI and develop more and more using AI, the more I'm convinced that this AI boom is not actually a bubble, as a lot of people are talking about. Especially, yes, I mean, there are concerns about the capex, the capex spending, but at the same time, you have to look into the broader picture. It's not about just using ChatGPT to write an essay or summarize your emails or something. It is much more than that. It's basically using AI in order for you to scale the capabilities of humans on a day-to-day basis. Maybe today I'm with you in person, at least over Zoom. Maybe the next meeting, or the next interview, it might be my digital double. Nobody knows, but is this capable?
Okay, so not a bubble.
Is AI capable of doing that? Yes, that is.
Okay, so not a bubble on the AI front. That's a line that a lot of people would agree with you on. Let's move on a little bit to the geopolitics. Yes, there's a sense of plateauing in the region when it comes to further escalations. We're not really in full war or full peace mode just yet. When it comes to the record highs that we're seeing across global equity benchmarks, do you think the market is now completely overlooking the risk that could surge back from the Middle East?
I think it's not just basically, the risk isn't whether, oil will be moving another $5 or $10. It's basically the duration. I mean, the Strait of Hormuz remains also disrupted while the Red Sea is also impaired. You're affecting two critical parts of the global trade simultaneously. Hormuz is primarily an energy supply problem, while the Red Sea is also shipping and insurance, in addition to transportation cost problems. So I think this is still, yes, the market may be just overseeing what's going on and hoping, and that's, I think, what is basically driving equities, is the hope that maybe the biggest risk of the war is over, but I don't think so. This is the case, and that's why we need to be very careful and to be hedged against any further escalation going forward.
All right, Noureldeen, we're going to have to leave it there. Thank you as always for your time. Noureldeen AlHammoury, Chief Market Strategist at Equity Group. Now coming up, oil held a decline as tankers laden with crude continued to exit the Persian Gulf. We'll bring you the latest details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Oil is flat this morning as traders monitor efforts to reopen the Strait of Hormuz. Fresh attacks on tankers and energy infrastructure have kept the market on edge. And Treasury Secretary Scott Bessent says the U.S. will roll out unprecedented economic measures against Iran next week. So for more on all of this, we're now joined by Stuart Livingstone-Wallace, Bloomberg's head of the Middle East and North Africa. Stuart, the U.S. is resorting to economic pressure, not just Scott Bessent saying this, President Trump also bringing back that argument. So what else do we know about what kind of economic pressure the U.S. is thinking about?
So, I mean, look, we don't know because it's coming next week. And it's going to be very hard to guess in advance because Iran is probably one of the most sanctioned countries on the planet. They've had 4+ decades of sanctioning thousands of individuals, more or less chopping off all trade. So we presume they'll go after shadow banking. We presume they'll go after crypto if they can. That's a very difficult one, but that clearly is, heavily relied on by the Iranians. And potentially third party as well, so-called secondary sanctions. So they go after the trade partners. But the difficulty they face is there are fewer and fewer countries now trading with Iran. I think everyone kind of got the message that they're going to be cut out of the SWIFT system if that continued. So we'll see what they come up with.
And that deal between Iran and Oman, it's been in final stages for the past, for the final stages of us discussing it. What exactly is happening there?
Again, we don't particularly know the details of it. We presume there's some to and fro over the details with regard to authority, who gets to make final decisions, potentially about how you collect fees. But there may also be an issue here with who exactly signs off on the deal. So I think from the Omani side, that's fairly straightforward. From the Iranian side, you've seen over the last week there's been a whole raft of appointments and reappointments and people demoted and promoted. So there clearly is a fairly serious change of control within Iran and definitely competition between various factions. So it may be, and this is speculation, but it may be that they're sort of waiting to make a final decision because they're kind of reordering the deck chairs, as it were.
And so perhaps this is a little bit too premature to be able to determine how countries are adapting to these disruptions, but can you give us any examples about how countries in the region particularly are adapting to what is happening in the Strait of Hormuz? One day it's open, one day they have to go with lights switched off. What are they doing?
It's a whole raft of measures. So they've actually been very clever about it. And we don't know the full extent because, as you said, a lot of it's being done in the dark. And I mean, yes, metaphorically, but also literally. And we sort of discover that ships have moved through Hormuz several days after they've gone through. But it's not just that. It's rerouting supplies, and it's not just oil, and it's not just gas. It's also, container goods and so on. So taking a lot of the lessons they learned from COVID in terms of alternative supply chains and then basically putting it on steroids. So, I'm sure you've noticed that supply chains through the region, yes, they're disrupted, but there's no shortage of anything.
Yeah.
So I think that speaks to kind of the creativity that's gone on in terms of making sure things keep ticking along.
Yeah, tough times, tough measures. Stuart, thank you as always for your time. Bloomberg, Stuart Livingstone Wallace with the latest on the geopolitics. Now, for a look at some of the other stories that we're following this morning, DP World's reported first-half profit of $585 million. The Dubai-listed company said the outlook on medium to long-term global trade is positive, even as the near-term environment remains uncertain. And Arab Gulf companies are making their debut in Venezuela through an offshore natural gas project to be operated by BP. The UAE's XRG will hold a working interest in the license alongside BP and Qatar's UCC oil and gas holding. The deal signals the Venezuelan government's willingness to advance energy deals negotiated before the U.S. capture of Nicolas Maduro in January. And the Trump administration is imposing tariffs of up to 100% on some foreign-made drones and components to reduce reliance on overseas suppliers, particularly China. The top 100% rate will apply to drones of a certain size or those that possess national security capabilities, while other imports will face lower duties. And coming up, OpenAI is on track to generate more than $40 billion in annualized revenue ahead of a potential IPO. We'll bring you the latest details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Bloomberg has learned that OpenAI is on track to generate over $40 billion in annualized revenue based on its current performance. The ChatGPT maker's revenue has accelerated in recent months, roughly doubling its run rate from the end of 2025. So for more on this and other tech stories, we're now joined by Bloomberg Markets Today editor Sam Unstead. Sam, good morning. OpenAI's revenue, what is really driving this sharp uptick that we've been reporting in its revenue?
Well, so it's actually a little bit broader than you might expect. So it's from some of their new tools, from very nascent advertising business as well. Most of this, though, is the kind of important part of understanding what the run rate is at OpenAI is what is then going to happen for its IPO. So they and Anthropic, their kind of arch rival within that space, both gearing up to do IPOs, and so both kind of trying to bolster the case for that, trying to kind of get across how strong all of their growth is. And, much more broadly, of course, it's coming through the extremely strong growth in AI much more generally, which we've sort of seen dominate most of the past few weeks of earnings season.
And Sam, something else we've been reporting is this competition from China when it comes to just wider themes in artificial intelligence. DeepSeek is obviously one of those companies that came to the limelight last year, and it's steeply raising the prices for its flagship V4 models ahead of its potential IPO itself. So what can you tell us about that?
Yeah, so they are raising their prices, although they are still quite significantly lower than most of the other sort of major AI companies out there, including the likes of Anthropic. And again, this is sort of bolstering their case for an IPO, but it relates actually quite neatly to, as I mentioned there, Anthropic and OpenAI as well. This is a kind of threat that's been bubbling up and has kind of come up a few times over the course of the last couple of years of much cheaper AI models coming out of China and potentially undercutting what Anthropic and OpenAI are doing to back up their own businesses. But it also indicates, for DeepSeek, they're raising these prices because when you come up towards an IPO, you really want to bolster your profitability in order to attract the most attention and to have a successful IPO. So still a lot cheaper than other places, but they are clearly having to raise prices more than maybe I think some had expected.
And chip makers are back in the scene, Sam. Yesterday, SanDisk, our favorite company. Can I say it is our favorite stock? And then we also saw AMD is turning back to debt financing. What can you tell us about the return to those chip maker names?
Yeah, it's been generally like a very strong week for memory names in particular. I mean, for AMD, they're going out to the market. They are borrowing, I think, just over $4 billion. So overall, fairly modest in terms of the amount of money that's being borrowed by various hyperscalers and other AI names. But even so, it kind of gives you this indication of quite how much money all of the companies are having to spend in order to keep up with the demand, to keep up with the kind of hyper pace of the AI market.
All right, Sam, we're going to have to leave it there, but thank you as always for your time. Bloomberg Markets Today editor Sam Unstead. Now, for some of the other tech stories we're following, CXMT has eclipsed Tencent as China's most valuable company, highlighting investors' growing preference for AI-linked chip makers. The Shanghai-listed firm was worth about $524 billion as of Thursday's close. And the milestone comes as Tencent faces investor concerns over rising AI spending, while CXMT has emerged as a key proxy for China's AI ambitions. And Reddit shares surged in after-hours trading on news that it will join the S&P 500 index. The index provider says the social media firm will be added to the benchmark before trading begins on August 18th. Reddit will replace Avalon Bay Communities, which is being acquired by Equity Residential. Now, a quick look into where equity benchmarks are sitting before we head to the break. S&P futures still flat, Nasdaq 100 futures flat to the downside, and Dow Jones futures also flat. Although Euro Stoxx 50 futures are 0.3% higher. And of course, we're keeping an eye on Brent crude prices that are moderating compared to the moves we've seen over the past week or so. So you're seeing Brent crude sitting at 87 on the dollar exactly, and NY crude at 81.2 on the barrel. Now, coming up, we will talk to Rachel Ziemba, founder of Ziemba Insights, as oil heads for a weekly gain and the Iran war drags on. More analysis next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Economic offensive. The U.S. plans to announce economic measures against Iran. Treasury Secretary Scott Bessent says the plan includes the continued blockade of Iran's ports. Asian stocks climb as softer U.S. inflation cements bets that the Fed will hold rates next month. Meanwhile, Treasury borrowing costs for 30-year bonds hit a 25-year high as investors demand more yield. And Bloomberg learns OpenAI is on track to generate more than $40 billion in annualized revenue ahead of a potential IPO. Growth in coding tools, subscriptions, and advertising is helping drive the surge in its sales. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abamar in Dubai. We're still looking at an equities picture that is at record highs when it comes to U.S. equities or global equities as well that have arrived at that record high once again this week. So S&P futures this morning quite flat. We did see the S&P 500 close at an all-time high, 6.5 or 0.65% higher yesterday. Nasdaq Stocks Index also closing higher yesterday in the United States. Some individual names when it comes to the chip makers were of interest yesterday. That was SanDisk. That was 14% higher at the close yesterday. This is obviously after the earnings, 12% higher after the earnings yesterday. The solidified demand for chip makers led, of course, lifting in other names that included Micron, Western Digital, and Seagate as well, that were all turning at least 4.8% higher by the close. And then we're keeping an eye on Asian equities, 0.3 higher this morning. The Kospi is set for a weekly gain. Asian equities are set for a weekly gain of 2.6% higher this week. So overall, a positive picture. And then look at Brent crude prices, completely unchanged as of now, $87 on the barrel. The situation in the Middle East has been plateauing over the past couple of days, but especially today, we don't know what exactly that economic pressure from the United States is going to look like on Iran, but we continue to monitor what is the most essential for Brent crude prices, and that is the movement in the Strait of Hormuz. And then the yield on the 10-year Treasury notes, 4.65%, not doing much this morning, about a basis point higher, but Treasuries have really held the advance we saw on Thursday after that U.S. wholesale inflation report showing a cooling in July. The yield on the 2-year notes, the rate-sensitive notes, was little change this morning, but it fell 6 basis points in the prior session. And perhaps what is most important out of all of this is that money markets are now pricing in about a 35% chance of a Fed rate hike in September. That was 50% yesterday, so even lower, a rate decision to keep an eye on for sure in the coming month. But for a deep dive into what is happening in Asian markets this morning, we've got Winnie Su standing in Hong Kong for us. Winnie, what do you have for us?
Yeah, good morning, Abir, and happy Friday. Well, it has been a very decent week for Asian stocks. As you just mentioned, we are looking at weekly gains at slightly less than 3%, which is actually our best week in about 2 months. Now, yes, overall sentiment is supported by those latest inflation data from the U.S. pointing to investors walking back their bets around the Federal Reserve's rate hike. And you are seeing that's lifting tech stocks in Asia, especially with the Kospi here up almost 2%. And in fact, we are also seeing a weekly inflow into Korean market, the highest since April. So you are seeing foreign investors returning to the Korean market. Japanese stocks also a bit higher, while the Japanese yen slightly stronger, but still hovering right below that 160 level against the dollar as we continue to watch out for the risk of intervention. Now, flip the board, we take a closer look at the tech stocks because, as you mentioned, memory stocks really driving gains today with Japan's Kioxia and SK Hynix both up about 4 to 5%, coming from that bullish outlook of SanDisk as investors really liked how they are raising their, they are seeing a strong revenue forecast, and also these long-term agreements, plus the expectation for the cash returns. Now, on the weak side of things, we are seeing Chinese internet names continue to be a drag, with JD.com leading declines down about 10%. It did, in fact, log its very first quarterly revenue loss, and that is coming as consumer sentiment remains weak. While on the other hand, the strength really is on the hardware side of things, with SMIC here up about 2% after results beating estimate on a global demand when a global strong demand for chips. Back to you, Abir.
All right, Winnie Su in Hong Kong with the usual market update. Now, returning to the oil story, it was completely flat on our market check. Brent completely flat, but oil futures are still on track for a weekly gain as the Iran war that began in late February drags on. Treasury Secretary Scott Bessent says the U.S. will announce unprecedented economic measures against Iran. So for more analysis on this story, we're now joined by Rachel Ziemba, founder of Ziemba Insights. Rachel, good morning. Good to have you with us, as usual. Brent crude, flat, not doing anything this morning. No reaction, really, as much, at least, to those geopolitical headlines that we're seeing out of the Middle East. So do you think the market is finally overlooking this geopolitical risk premium?
So I think the market, thanks, Abir, wonderful to be with you. I think the market is responding to competing trends, right? They've struggled to price these risks for some time. But what we're seeing the market react to is, on the one hand, Chinese demand continues to be much weaker than it was before this conflict started. And we're seeing some increase in volumes as tankers linked to governments, such as the UAE, are getting some supplies out. But I think in this context, markets are overlooking the fact that buffers have been drawn down and that this conflict could continue for some time. It's not clear to me that the U.S. government is ready to really target the Chinese ports and infrastructure that buy Iranian crude. So we'll see what happens.
So if that is the case for a while, Rachel, and that looks to be what the market is estimating, a constrained movement in the Strait of Hormuz, what do you think, what product do you think will be the biggest headache or will have the biggest upside movement? Would it be Brent crude? Would it be oil itself? Would it be LNG or other crude products?
Yeah, I think we're going to see that the stress particularly continue to be in diesel, in oil products, even gasoline, though gasoline is off, at least in the US, a little bit. LNG, too, continues to be in short supply. The Qataris are preparing and looking to bring more supplies to market. But LNG can be more dangerous to shuttle or more difficult to shuttle out. And we're heading into this important period of the year where the Europeans, where the Northeast Asian buyers inject more fuel into storage. So I think we'll continue to see that trend. Also, I think we'll continue to see it reflecting in some other parts of the commodity class into metals like copper, which are still facing some of the restrictions from sulfur.
Okay, so Rachel, when it comes to the economic damages that have resulted as a part of this constrained movement, do you think that the market is underestimating just how much economic damage we would have, even if oil flows theoretically do go back to normal?
Yeah, so I think the market's really, the broader global market's very focused on the AI sort of scale up, and that's why they have been underestimating. But we have to recognize that globally, we are less reliant on oil for GDP growth and earnings than we were even 10 years ago. So the good news or the resiliency story is that link has started to ebb. The other part of the story on the power side and LNG is that more renewables are being installed. So this is a pain, a damage we haven't fully recognized. But there have also been some shifts in demand that make it better than it could be. And I also think we have to recognize the importance of flexibility of getting supplies to market and the new investments that are occurring. So it's a mixed story here, and one that I think we'll see continued through the inflationary channel as well as somewhat slower growth.
All right, Rachel, thank you as always for those insights. Rachel Ziemba, founder of Ziemba Insights. Now coming up, Saudi Arabia looks to shift strategy for its $1 trillion sovereign wealth fund, paving the way for greater privatization. That story is coming up next. This is Bloomberg. Saudi Arabia's $1 trillion sovereign wealth fund is preparing to make an aggressive push for greater privatization. The fund plans to hand mature assets to private owners, pursue listing and divestments, and lean increasingly on outside capital. The strategy marks a deliberate shift after years of heavy state-led investment. To discuss this story, I'm now joined by Bloomberg's Money and Power reporter, Omar El-Shmouri. Omar, good morning. Good to have you with us.
Good morning, Gabi.
What's new about this strategy? What can you tell us about what exactly is the thinking behind that is from the PIF?
Right, so this new strategy document provides the clearest indication yet of the role that the PIF sees itself playing over the next few years. It's all about value creation, as they put it. So that entails a few things, including potential consolidation of more of its portfolio companies, as well as potential increase in stake sales. And furthermore, they've highlighted repeatedly wanting to crowd in the private sector. So that is something they've been trying to do for a bit. We've seen earlier this year, like locally, they've sold a majority stake in a football club, and that seems to prelude more of such sales. And they're also encouraging some of their portfolio companies to tap them, like IPO, essentially.
Okay. Yeah. And just generally, when it comes to the wider prospects of the Saudi economy and then the wider strategy of the PIF is trying to do, what implications will this new approach have?
So let's start with its own portfolio companies. Over the past few years, the PIF has created about 100 of those, and most of them have been reliant on it for funding. So now the fund is encouraging them to become more competitive, generate more cash for themselves, and tap a wider mix of financing that includes local and international investors, and potentially also having the debt markets. And that includes the mega projects such as NEOM. They're highlighting more practical aspects of it, like the ports and manufacturing in Oxagon. And there was like no mention of the line, for example, which was a very ambitious part of it. And internationally, they do seem to remain committed. I mean, the idea of reducing the reliance of portfolio companies on the PIF is to free up its balance sheet to invest in other stuff.
Okay, Omar, excellent reporting as always. Bloomberg's Omar El-Shmouri with the latest on what is happening in Saudi Arabia. Now, for more on these stories looking at the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. Now, moving on to a different country, Turkey's central bank has moved its year-end inflation forecast closer to market expectations at 28%. That is up from its previous estimate of 26%. Governor Fatih Karahan conceded that the bank's past forecast missed the mark and described recent efforts to curb inflation as, quote, a partial failure. So to discuss all of this, we're now joined by Bloomberg Turkey Deputy Chief Beryl Akman. Beryl, good morning. Can you talk to us about the reason behind the upward revision in those inflation figures?
Good morning, Abir. Absolutely. So in his presentation yesterday, Central Bank Governor Fatih Karahan alluded to two main aspects for this upward revision. One, he mentioned the uncertainty stemming from the Middle East conflict and how that's reflecting on oil prices. Now, Turkey is a major energy, both oil and natural gas importer, so it has been impacted from the war and the elevation in these prices. But Karahan also mentioned the secondary effects, such as how inflation or energy prices are stemming into transportation costs. He also mentioned food prices, which have been very volatile in the past, and he said that volatility will continue. However, he also mentioned that this upward revision was more limited per se compared to what markets are expecting at the end of the year, which is about 29%, because he said that they're seeing an economic slowdown and a subdued domestic demand that's also bringing prices and that demand down here at home.
So there is the next question, Beryl, I think you would know, is a cause and effect question. What does that mean, therefore, about the path forward when it comes to rates?
I think one question, Abir, that investors and economists were expecting to find out from yesterday's presentation was when the central bank would normalize its liquidity policy. And what I mean by that is since the outbreak of the war at the end of February, the Turkish central bank suspended funding from its main policy rate of 37% and switched to a higher, costlier overnight lending rate of 40% and has since kept the liquidity conditions in that way. Karahan, when asked about whether there'd be a normalization in that policy, said that it was on their agenda, but he refrained from giving a specific timeline. However, already some banks like ING, for example, are expecting that normalization to start as early as this month. But during his presentation, Karahan mentioned the caveat that even when they return to the funding of 37%, the policy rate, that would not amount to easing, and that would not mean any signals on the further path of rates or any future cuts.
All right, Bloomberg's Beryl Ackman with the latest on the inflation figures out of Turkey. Now, coming up, a record rise in profits for standard banks amid pressure from conflict in the Middle East. We'll bring you the highlights of our conversation with CEO Tshabalala. That is coming up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Africa's largest bank by assets, Standard Bank, has reported record first-half profits as the firm navigated the inflationary and monetary policy effects of the war in the Middle East that weighed on its clients' confidence. Bloomberg's chief Africa correspondent Jennifer Zapasaja spoke to the bank's CEO about the results and more. Take a listen.
Bottom line, the group is up 10% in headline earnings per share, with a return on equity of 19.8%. Both are ahead of expectation and are records. What stood out was, higher inflation and higher interest rates for longer on the continent as a consequence of the Middle Eastern conflict, which showed up in our net interest income. Weakening currencies on the continent relative to the South African rand that showed up in diluted revenues, but improved costs when you convert them to South African rand. And you saw a very resilient South African operation, which performed very well in each of the 4 business units. Really, the execution of our strategy vindicated by these financial outcomes.
How are you seeing clients then reacting to some of the challenges that we are seeing as a response to what's happening in the Middle East? Because you do note in the statement, uncertainty has definitely weighed on clients' confidence.
Uncertainty has weighed. People are taking longer to make payment decisions, drawing down decisions, investment in their projects. On the one hand. On the other hand, there are opportunities. Countries on the West, particularly those that are oil producers and gas producers, investing in their plant and machinery to take advantage of the price advantages arising from the oil price currently. Countries in the East, especially the oil importers, obviously being challenged by the dislocation. And then, of course, fertilizer prices being adversely impacted and really, Jennifer, having an impact on food security.
You mentioned oil producers. We know Standard Bank, of course, has been appointed the lead arranger for the upcoming IPO for the Dangote refinery. I know you've mentioned your commitment to this. What is the opportunity you see here?
Jennifer, in a few words, this is one of the single most important manufacturing and business events on the African continent. It's a game changer for Nigeria and as well as for the West African region. And it has contributed to the ability of Nigeria to meet the needs of Nigerians for refined petroleum. with a reduced negative impact on the environment, which is very, very important. It also puts the country in a position to export. For example, it exports jet fuel to countries like the United Kingdom, and is therefore of massive significance for West Africa. Dangote, of course, has got interests outside West Africa, and we will be supporting them in the execution of that strategy in other parts of the African continent, in particular the East, as is currently contemplated. We provide advisory services. We also provide our balance sheet to that great company.
What can you tell us then, Sim, about some of the details of the planned IPO, the size, the date? How much has been decided on at this point?
I think you need to talk to the company on that. And Jennifer, with respect, it's not germane to our results.
That was Standard Bank CEO Sim Tshabalala speaking with Bloomberg's Jennifer Sapasadra yesterday. Now, South Africa's transport minister says the state-owned ports and rail operator is seeking as much as $2.2 billion from the National Treasury for projects through 2030. The cash will be used to finance upgrades and equipment orders that Transnet needs to turn around the company after years of underperformance and graft. And Africa's top public health agency says the Ebola outbreak in the Democratic Republic of Congo has spread to a sixth province and is on track to be the worst in history, if not slowed soon. There have been more than 4,400 confirmed cases of Ebola and over 2,000 deaths through August 10th. Now, before we head to the end of our week, a quick look at equity benchmarks. S&P futures still flat. Nasdaq 100 futures down slightly, 0.1% lower. And Dow Jones also flat. Euro Stoxx 50 futures 0.3 higher this morning, and Brent crude prices moderating as tensions in the Middle East plateau so far this week. But that is it for Horizons Middle East and Africa. Stick around with us for Daybreak Europe. This is Bloomberg.